For thousands of years, civilizations have risen and fallen, empires have collapsed, currencies have disappeared, entire financial systems have been replaced. Yet through all of that chaos, only a handful of assets have managed to preserve value across thousands of years of human history: gold, silver, and productive land. Everything else eventually changed forms, but these three assets never went to zero. And right now, something extraordinary is happening. Gold prices are surging once again, and investors everywhere are asking the same question. Is $5,000 gold closer than we think? At first glance, this sounds like another sensational headline. But when we zoom out and examine the underlying forces driving the global economy, a very different picture begins to emerge. This isn't simply a story about gold. It's a story about debt. It's a story about geopolitics. It's a story about inflation, energy security, central banks, and the gradual transformation of the international monetary system. Because here's what's really happening behind the headlines. The world is entering a period of structural change. Global debt levels are reaching historic extremes. Governments are spending faster than they can collect taxes. Supply chains remain fragile. Geopolitical tensions are reshaping trade routes, and central banks are quietly preparing for a world that may look very different from the one we've known for the past 30 years. Most investors are looking in the wrong place. They're focused on daily stock market moves while ignoring deeper forces unfolding beneath the surface. Few people understand the chain reaction that could unfold over the next decade. Today, we're going to connect those dots. We'll explore why gold prices are surging again, why some analysts believe $5,000 gold is no longer an impossible scenario, why three assets have survived every monetary experiment in human history, and what ordinary people should understand before the next major economic cycle unfolds. Along the way, we'll uncover 6 critical insights: why gold is attracting global attention, why supply constraints matter, how demand is changing, what history teaches us, why central banks are paying close attention, and what all of this could mean for your own financial future. Let's begin. Because this story is much bigger than gold itself. The first thing to understand is that gold isn't suddenly becoming important. It's becoming impossible to ignore. Here's what most people don't realize. Gold isn't rising because investors are excited. Gold rises when confidence begins to weaken. Think of the global economy like a giant machine. For decades, that machine was powered by trust. Trust in governments, trust in currencies, trust in financial institutions. But when trust starts to erode, people begin searching for assets outside the system. Gold has traditionally been one of those assets. Recently, central banks have accelerated their purchases again. According to the World Gold Council, central banks remain significant buyers, and a growing percentage of reserve managers plan to increase their gold holdings over the next year. Reuters. 1. This isn't happening because gold produces cash flow. It doesn't. Gold produces certainty, and certainty becomes valuable during uncertain times. Meanwhile, global conflicts, trade fragmentation, and rising debt levels continue creating an environment where governments want reserve assets that are independent of another country's liabilities. The mainstream media often frames gold as an emotional investment, but central banks don't manage trillions of dollars based on emotions. They manage risk, and risk management is becoming increasingly important. If you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly. Now let's talk about supply. Because demand gets all the attention, but supply often determines price. Imagine trying to fill a swimming pool while someone keeps turning off the hose. That's essentially what's happening in global mining. Gold is becoming harder and more expensive to find. Ore grades are declining. Energy costs remain elevated. Permitting new mines can take over a decade. Environmental regulations are becoming stricter, and geopolitical risks continue to rise. Countries like Mexico, Peru, Chile, China, Russia, and Australia all play critical roles in global mining supply. But every one of these regions faces challenges: political instability, resource nationalism, labor shortages, energy costs, water constraints. Mining is no longer as simple as digging a hole in the ground. Today's miners are competing against inflation itself. Diesel fuel costs more, steel costs more, equipment costs more, labor costs more, and discoveries are becoming increasingly rare. In many ways, the easy gold has already been found. That doesn't mean supply disappears. But it does mean future supply growth may struggle to keep pace with long-term demand. Now let's shift to demand. Because gold is no longer just an inflation hedge. It has become a strategic asset, and while silver often dominates discussions around industrial applications, gold itself is increasingly important in advanced technologies. Electronics, artificial intelligence infrastructure, data centers, medical devices, aerospace systems, semiconductors, defense applications all require small amounts of gold because of its unmatched conductivity and corrosion resistance. At the same time, governments are spending aggressively on energy infrastructure and technological independence. Industrial demand for precious metals overall continues to expand. Artificial intelligence requires enormous physical infrastructure. Cloud computing requires massive data centers. Defense spending is increasing globally, and nations are prioritizing supply chain security. The energy transition isn't just an environmental story, it's a material story. Modern civilization runs on metals. If this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert. Because understanding these trends today could help explain tomorrow's headlines. History rarely repeats perfectly, but it often rhymes. Let's travel back to the 1970s. Inflation surged, energy prices exploded, economic confidence weakened, gold performed exceptionally well. Then came 2008. Banks failed, credit markets froze, gold rallied again. Then came the pandemic. Supply chains fractured. Governments printed unprecedented amounts of money. Gold reached new highs. Each crisis looked different, but the underlying psychology remained remarkably similar. People sought certainty. Markets reward certainty during uncertain times. This doesn't mean gold rises in a straight line. It never has. There are corrections, periods of underperformance, years of frustration, but over thousands of years, gold has retained purchasing power remarkably well. That's why ancient Romans, medieval merchants, and modern central bankers all recognize its role, not because gold changes, but because human behavior doesn't. We repeatedly create debt cycles. We repeatedly overextend financially, and we repeatedly rediscover why tangible assets matter. Now let's discuss smart money, because this is where things become particularly interesting. Central banks are effectively voting with trillions of dollars. According to World Gold Council surveys, more reserve managers plan to increase gold holdings, while central banks have maintained historically elevated purchasing levels over recent years. Reuters 1. At the same time, countries associated with the BRICS alliance continue exploring alternatives to excessive dependence on the US dollar. This isn't about replacing the dollar overnight. That narrative is often exaggerated. It's about diversification. The global debt burden continues expanding. Governments face aging populations. Budget deficits remain enormous. Interest expenses are rising, and policymakers have difficult choices ahead: raise taxes, reduce spending, or allow inflation to gradually erode debt burdens. Historically, governments often choose some combination of all three. Gold benefits when confidence in fiat currencies weakens. According to World Gold Council data, 2025 remained another historically strong year for gold demand, with total demand surpassing 5,000 tons for the first time and investment activity accelerating significantly. World Gold Council 2. If you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. So, what does all this mean for ordinary people? First, it means paying attention, not panicking, not making extreme bets, just paying attention. No one can predict the future with certainty. Nobody knows exactly where gold prices will be next year. Nobody knows if $5,000 gold will happen quickly, slowly, or not at all. But understanding the forces at work allows people to prepare rather than react. The biggest risk for many households isn't missing a gold rally. It's losing purchasing power over decades. Inflation quietly erodes savings. Currency debasement happens gradually. Retirement planning becomes more difficult. That's why wealth preservation matters, diversification matters, long-term thinking matters, risk management matters, patience matters. Remember those three assets that have survived 5,000 years? Gold, silver, and productive land. They've endured because they satisfy fundamental human needs, stores of value, industrial utility, food production. They don't depend entirely on software, political promises, or financial engineering. And that's an important lesson. Technology changes, markets evolve, but human civilization still depends on tangible foundations. As we wrap up, let's bring everything together. Gold's recent surge isn't an isolated event. It's the result of multiple forces converging at the same time. Structural debt, persistent inflation, geopolitical fragmentation, central bank diversification, supply constraints, and changing investor behavior. Together, these forces are creating a very different economic environment than the one many people grew accustomed to over the past few decades. Will gold reach $5,000? Perhaps, perhaps not. But that's not the most important question. The more important question is this: why are so many sophisticated institutions positioning themselves for a world where hard assets play a larger role? That's the question worth asking. Because sometimes prices are simply signals that deeper changes are underway. Markets move in cycles, headlines come and go, but the laws of supply and demand never disappear. Pay attention to the trends most people ignore, because sometimes the biggest opportunities emerge long before the crowd notices. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals. 1. https://www.reuters.com/markets/asia/more-2026-06-2026-166-1606-06-06-16-06-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16-16 survey shows. 2. https://www.gold.org/gold-demand-trends/gold-demand-trends-full-year-2025 Gold demand trends Q4 and full year 2025 World Gold Council.